Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. One of the most important trade partners of India is China. In 2020, our trade deficit with China was $50 billion. Today, it stands at $85 billion. We import 100 billion worth of dollars goods from China, which includes manufacturing item and mostly value-added items. This 100 billion is close to 25% of our merchandise import if we exclude oil, gold, precious metal, and coal. Now, if I have to quantify this 100 billion in terms of manufacturing sector का output, India's manufacturing sector output is close to $500 billion, which means that जो भी मैन्युफैक्चरिंग आउटपुट होता है उसका 20% हम चाइना से इंपोर्ट करते हैं. इफ चाइनीज करेंसीज मूव or get weaker, it is going to have a repercussion in Indian economy. In today's presentation, let us understand that. On 1st July, Chinese currency was trading close to 7.30. On 31st August, Chinese currency closed near 7.09. It means that Chinese currency got stronger against dollar. In the same period, rupee got weaker against the dollar. As a result, Chinese currency, which was trading CNY INR, which was trading near 11.42, it went from 11.42 to 11.82, which means that it has went up by 3.54%. It means that if someone is importing from China, it becomes costlier for Indian importer. Now, higher CNY INR means higher trade deficit with China, and it can add inflation in Indian economy. Now, let us understand what is the outlook of USD CNH in coming days and how it is going to impact dollar rupee momentum in coming days. In Japanese currency, we must have heard that unwinding of carry trade happened last month. Similar unwinding can happen in Chinese currency also. ये समझते हैं इसको डिटेल पे. From 2020 onwards, most of the Chinese investors were putting their money in dollar denominated assets. Now, as Fed is going to decrease the interest rate, they are going to unwind their positions which are there in dollar asset and may convert into their home currency, which is Chinese Yuan. If that happens, Chinese currency can get further stronger in coming days. Now let us see technical chart of USD CNH. USD CNH currently trading at a very crucial level of 7.09. If 7.09 is taken out, it can move towards 7.03, 7 and 6.96. If that happens, that CNY INR can move towards 12 and 12.20 from a current level of 11.80. Now let us discuss outlook on rupee. As we have understood from the presentation that China is one of our important trade partners, and we are expecting that USD CNH is going to get stronger and it likely to move towards 7.03 and 7 kind of level. If that happens, then CNY INR can also get weaker and it can move towards 12 and 12.20, because of which RBI might decide one day that it will not buy dollars on a continuous basis. If that happens, then our currency can appreciate towards 83.30 to 83.50 kind of levels. Until then, for near term, the pair may continue to trade between 83.70 to 84.05 levels. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. Most of the thin margin exporters are taking costing near 83.75 to 83.85 kind of levels. So ideal strategy for all of them is that they should cover 80 to 100% of their exposure between 83.85 to 83.95 kind of level. If someone wants to wait, they should keep a strict stop loss of 83.75 or costing, whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporters or engineering exporters. In October 2022, USD INR touch close to 83.20 kind of levels. Since then, it is consolidating mostly between 82.80 on the lower side and 83.95 on the higher side. If someone on a continuous basis have hedged long-term forward contracts and have kept the hedge ratio between 55 to 60%, they would have made money as rupee did not got weaker more than the forward premium. So we continue to suggest the same kind of strategy that between 83.80 to 83.90 they should cover 55 to 60% of their exposure if they are hedging under anticipation basis, and if they are hedging under confirm order basis they should keep a hedge ratio close to 70 to 80%. Now let us discuss strategy for importers. For importers, we will suggest them that they should only cover 50% of the near term imports near 83.75 to 83.80 kind of level. For remaining, they should keep a strict stop loss of 84.05 and wait. With this, I will end my today's presentation. Jai Hind, Namaskar. फिर मिलेंगे next week. Thank you.